All right, let's jump into it. 10:33 on the 3rd of October. Not really so much to sort of say in regards to sort of data overnight because the big thing we were kind of looking at, which actually not only has it not come out, but have actually removed it off the calendar here, was the unemployment claims, sort of like throughout the week. So previously, I can't even go back and reference it now, but it was a 218, expecting 225. I said, look, up around that band is going to be okay. I think once we get up around, I mean, even 230s is okay, but 240 is starting to like, people sort of, shake a little bit. But forget all that because we didn't get the data. It was tentative for a moment, so I don't know if there was umming and ahhing about sort of whether the data was going to come out. But obviously, with the shutdown happening, it's one of those bits of data just didn't come out. So we have had some snippets of data this week, but pretty much if you sort of put it under the ballpark, if it's private, so like ADP, they're the bits of data that sort of will get out. So market's a little bit up in the air, left in a lurch with that kind of stuff here. So I think that NFP and all this kind of stuff's still down here. And of course, there were sort of predictions of numbers coming out by the big banks because it's not like the market stops. It's not like everybody's okay, we're all taking a break. No, it's just the sort of US government, apart from the non-essentials, yada yada. But you've got sort of all those sort of things. Not to sort of get into it too much, but like the sort of we're talking the people that work at the monuments and all this kind of stuff as well. But 700,000 people, I think, was the number. Maybe actually no. So correct myself. 700,000 people was the people of potential layoffs that they could have. Sort of if this thing carries on long enough. Apparently, the longest one they've had is 35 days. So we'll see how we go. I wouldn't be expecting too much. Honestly, as you can see, tentative here for the unemployment rate, non-farm, all this kind of stuff here. So be interesting to see how the market reacts to lack of news here. It did actually react a little bit last night. Whether that was directly related to the fact of no news, it's hard to say. Like, you wouldn't sort of think, hey, look, no news, let's go and buy up the US dollar. Maybe it is. I mean, look, it is technically a reserve, sorry, technically a safe haven. It is the reserve currency. So, there is some sort of theory to it, but given the price action that we've seen with it more recently, it's a bit of an odd sort of bit of movement there. So anyway, we'll see how we go tonight, but I wouldn't be hanging a hat on too much of the data coming out at any time. So not really too much to say here. Yes, we've got a couple of little PMIs all over the place and that. Nothing really. This set of data here, where have I got this other one actually? Drag this across. This guy seemed to have a little bit more stuff. So, we got sort of a bit of Aussie data came out this morning. Services PMI sort of beat a little bit there. So much here. Again, it's just the PMI data and that, and sort of this stuff's not really going to be moving too much. So I'm going to be sort of trading. Uh, PPI tonight. Again, Euro not really going to be doing much. Got a speech. Williams said that. Again, sort of like, unless it's Waller, Bowman, or New Mirren, I don't think. I would take it probably more on, don't want to say hawkish, but I'd say less dovish sort of side of things. So, I mean, nobody's calling for hikes, but they could sort of be calling for sort of like, a slowdown and let's not jump too quickly kind of sort of approach with sort of like the cuts and that sort of coming at the moment. But what we did get in terms of jobs data this week was ADP. Just hate using the two sets of calendars here, but ADP this week, and obviously shocker number, just shocking. But anyway, so jobs is very much still on the cards for it all. Jobs, the reaction with that from the Fed is obviously to cut. So more weakening in job numbers, more bolsters the idea that we're going to be sort of getting a bit of a cut. For what it's worth, that just having a quick look over here. Oh, put this over here as well. And as you can see, this is the little Fed watch thing, sort of what it's worth. This thing jumps around a little bit. It was earlier in the week, there was a bit of a sort of a more of an idea of a hold. Yesterday, it went to a sort of full idea of a of an easing. So you can see up here, and that's sort of like obviously nobody's looking for a hike, 2.7%. So very small snippet chance of a no hold of a hold, and then obviously the market is pretty much expecting a cut, sort of come the sort of rate decision there. This can change a lot. It's just kind of like use it as a barometer of this moment of sort of kind of like how the market's potentially positioning itself. A bit of data will come out, this will move, but it's just yet another bit of a puzzle that you put in together. Anyway, let's jump onto the charts because that's obviously sort of something that we could work off a little bit more. And DXY actually got a rip yesterday, so this is what I've sort of been sort of calling this kind of move back up over here. We're in a very sort of precarious kind of position at the moment. There's two sides to this because yesterday, well, actually, the last 2 days, I've been going, okay, look, we had this big negative divergence down here. Well, obviously, it's dropping down here. The buying pressure is certainly slightly stronger here, but we are still seeing this sort of moving up. Obviously, price is now sort of catching up with that. But a couple of things to take away for this. One, hit that sort of 4 hour resistance. That's fine. This is zone. This is where we kind of expected sellers to sort of come in. The fact that it went above the highs and then sold back down puts a bit of a question mark on it. So not the only thing that I put a question mark on it with it as well is the fact that sort of like this kind of move here kind of really came out of nowhere. There was no real sort of catalyst for it. Yeah, you've got this little channel coming down here. We bounced off that sort of 78% retracement, whoops, of that sort of last drive up over here. And so yeah, you've got some technical things. You got 78. You got obviously the failed rejection to sort of continue down there, and bang, it moves up over here. But this, because this has obviously been so incredibly weak, and this is what I was saying that, to me, I can't see the catalyst why they just said, hey, look, bang, let's go, let's buy, other than just sort of go, like, we're clearly moving down through the week. I did say yesterday that even if we are going to go lower, I would expect a move up over here first. And now we've got that, and now we're sort of this is why I say we're in this precarious position, because it took out any of these sort of technical stops around here. That leaves it free now to now move down lower. And that gives you your lower high and a move down here. So like, I mean, obviously anything can move any which way in that, but typically like to see this thing sort of come along and then dribble and then, but that's an Aussie move. That's how you would expect the price action around Aussie to be. Like, yeah, I've been caught out, unfortunately, very costly in the past. But, sort of coming back down here. So, whoops, let me show you this. This is going, bit of a history lesson. This is the kind of thing that I'm talking about. So, Aussie sort of, where was it? This is the area here, so I can pick these things straight away because I'm very well aware of them all. But I was long Aussie, great trades through here. This is on the daily chart. But see, the structure of these things is phone resistance, back, tackle the highs, break through, cycle starts again. Resistance, tackle the highs, break through, cycle starts again. Come back. And I was long on this pullback here, expecting a minimum of a move up here. And structurally, that's how you should have it, because this is what tells you that the trend is turning around. Lower high, okay, now we start to see a move back down here. In a perfect world, of course. But the point is, what I'm saying is that kind of idea of just pulling back, and then just and then dribbling further. That's the kind of price action that I expect to see on Aussie. These kind of things, you dribble and just pull back further, so on and so on. DXY doesn't tend to sort of trade so much like this. You don't tend to see that on the charts so much. This is on a lower time frame, but structure's still structure, and it's just the price action that we sort of see with it all. And as you can see, as these things come down, well, actually, maybe this one here is a bit of an example, but you do see it's at least to move up, to take out the highs, and then drops down further. So what I'm sort of getting at is the idea, and this is what I said yesterday with my call in the morning, was that even if this thing is to go lower, I would expect to push up. So now we've got that push up. Now we're sort of in this question mark area. Do we get this course of action, which is what I was looking for, rejection from this 4 hour zone? Yeah, it got a little bit higher, but more or less it rejected from this zone. came back down here. Do we get this second effort and push up and test these highs over here? So obviously above those highs overnight, that's going to be our confirmation. Above 98.15, we look at 98.48, and we look to sort of then test this move here. Things get very hairy for shorts and that above over here, but let's take it one step at a time. But the flip side of this is obviously now that we've taken out all these technical stops, we just dribble back down, and now we can resume our structure in this direction of down, up, lower, high. We tackle these lows, and we look, do we get a move down here? So this is what I'm sort of saying. It's in a bit of a precarious position. You can see the two directions here. There's an argument for both. And given the way that the price action's been with DXY for the last, I don't know, 6 months, you could be very much in the belief that this thing is just, here we go, a little short-term rally, bang, push down here. So there's a saying that I sort of heard a while ago, and they said it's sort of like the bet. How do you sort of like pick a sort of like a short rally, a short squeeze? In the short, sharp, and unrelenting. And yes, it's all relative to the time frame, but this is what I'm talking about here. This kind of move where, if you're sort of trading this, it came up here, stopped for a second, jammed up here, stopped here for a second, jammed up, kind of thing. We haven't seen DXY do much of this for a while, but there's always a chance that we could actually see this thing follow through. So I think sort of like certainly areas that I'm looking at was main thing above 98.15. Then we could say, hey, hold on, maybe we're going to be coming up to 98.50 over here. I think if we do start to dribble back down over here, yeah, you could get some sort of like maybe retest of the top side of this channel thing here, but I don't know. The confidence is a little bit shot on something sort of like that. I think this is kind of like a make or break time. If you fail down over here, I would say obviously you're coming back to test this 4-hour support down here, 97.50, underneath sort of 97.50. I think bang on with the show down to the downside over here. You're looking at sort of 97.25 to see if you can hold there. But the fact that they did the sort of clip out the shorts to here, I'd say it puts it in a pretty sort of dangerous position coming down over here. But, we'll see how we go. And these things do have to turn eventually. But, I mean, it's a very disappointing game, assuming that this thing is going to move. I was actually saying to someone earlier that, I think the way to tackle this at the moment is just to assume that it's going to fail. And then, if you get let down on that assumption, well, bang, it's moving to the top side. Otherwise, you assume it's going to fail, and, for 6 months and that, you would have been right pretty much 90% of the time. All right, so that's DXY. We continue along. Now, metals were very much the ones that got slapped on this kind of move here. We saw a nice little sort of double top sort of form. Silver and gold both obviously took a little bit of a clipping here. And if you have a look at this, this is a nice little sort of double top here. Measured move, came down, and look at this, pretty much right on the dot of, what's it called? 38.20 there, right on that sort of trend. So, it's just a little intermediate trend. It's not like the major thing. We're not seeing major breakdowns off this move here. But, again, same thing. If we see this dollar rally sort of continue, this could force this a little bit down. Now, we had that big sell-off on Tuesday. And that was like, oh, here we go, here we go. Not only did it come back up, it popped out the top and then sort of clipped out everybody and then did the same thing here again. So these are those kind of tops that I talk about. Basically, it's called a high heel top, high heel bottom, whatever you want to call. But, if you turn this thing around, the idea with it sort of being is that sort of like it's like a little stiletto thing. You sort of shoot, there's your stiletto, that, and, kind of like a high heel. It's funny, I heard this somewhere, and I've tried to look it up since. I've never actually found any actual mention of it anywhere. And you type it in, you're like, and it's like, there's no word of it anyway. So I don't know where it picked it up from. But the point is that these are the sort of good reversal tops and bottoms. So if you get this back up the right way, because obviously they work both directions, but the idea basically, obviously, coming down, you drift, you shoot back up here, clip, take out the top, out the highs, and then boom, you take out that swing position, and bang, and it absolutely hammered down. So yesterday I thought you would have had a lower time frame. That's kind of like this little ugly looking maybe head and shoulders. Doesn't look at all like it now, actually. At the stage, I think we were coming down here, so I was like, maybe shoulder, shoulder, boom, didn't happen. But the call was to come down to sort of 38.18. We got to 38.19. 38, yeah, 38.18, I think I said yesterday, but 38.15 on that little mark there. Anyway, regardless, downside is what we were looking for. So where are we now, and what can we sort of do? The idea here is if we're going to sort of come back up over here, if we are going to see, like these things are going to run together, they're going to come back into their little uh, correlations. We bounced off this little intermediate trend, this little sort of runaway trend. I know there's a whole bunch of these things. Maybe put it on the 4 hour, you can see a little bit better. Retesting the underside of this swing point, and then if this were to be a little bit of a runaway trend based off that sort of bounce that we got on Tuesday, it could be the underside of that trend. Now this little sort of diagonal I'm not as sort of crazy about, but look, I had it in there. We'll see. Didn't really think about it too much on the way down, but it is rejected. And I'd say more so rejecting from this little double top here. And this double top, as you can see, this actually came out very perfectly sort of to where market sort of came down to as well. So, there was a little bit of a completion in that move there. So the question now is, is that it? Like, as in sort of sell down wise, are we going to just see on with the show? Obviously, there's an argument for that. All these lockdown, shutdown things, there's uncertainty, all this yada yada. But from a technical standpoint, you had this big sell down. Everybody sort of was like, yeah, here we go, we got the top. So, this is a big, fast move coming down here. This is at the end of the quarter, end of Asia. So maybe there was something in that to unpack. But they came back out. So anyone short here didn't take profit. Well, bang, they're stopped out. Okay. Coming down here again. That looks like a fake breakout. Boom, coming back into it. Here we go. Stops above the highs. Bang, you're out again. Okay, they're done twice. Bang, breakdown here again. So these are the kind of things. It's sort of like, what I sort of say is, so like when you sort of think, oh no, all hope's gone, and you're like, shorted it, got stopped out, shorted it, got stopped out. Maybe you shorted all the way through here, got stopped out. That's eventually when you kind of will see these things move. So there is some sort of thought that we could potentially see this thing now sort of drift down. I'll go back a little bit there. I'll actually do those lines. See this as double top, break, retest, and then push down. If you take out overnight lows, so 38.20, that takes you outside this kind of channel, which that was right where we sort of got that bounce yesterday. So the third, fourth touch of that bottom side lines up perfectly with the top there. Now, if you break the channel, you break the high, the lows, obviously first target is going to be Tuesday's lows, just underneath 38. And then underneath 38, then we can start to look back down some of these levels down over here. You got your H4 supports. Let's update this here. Bang. And you can start to sort of see where can things kind of line up about the same. So around the 68% and around the 50% seem to both come in with levels, which I'd be pretty interested in with market reaction. Based on the idea that this is just the fib of just this last push up. So, I mean, we're only talking from the last 2 weeks, but through a little bit of a sort of consolidation, yada yada, and then bang, we got this last surge to the top side over here. So should we break out here? Should we get underneath sort of say 38? Then you look at probably say the 61 or the 50%. They're the two levels that I'd probably be expecting some sort of stronger market reaction from. These kind of levels through here. That's downside idea. If we do see this thing just dribble back up over here, well, really, you're kind of just looking back up over around these levels over here. And this is what I'm saying, that it's in a bit of a precarious position with the Aussie, with the dollar. Sorry, no, well, actually, Aussie, I didn't say Aussie, but with the dollar and with gold at the moment. in that, are we going to see dollar trying to squeeze up a little bit more? That's probably going to give us our gold move down to the downside. Or are we going to see this just dribble back up here? The dollar go back down towards the lows. Dollar, I think, is, as we say, dollar is king. I think if that sort of just dribbles back down towards the lows, we just see this grind back up over here, and maybe we start to consolidate in this kind of 50-60 buck range up over the top side over here. So I think it's a little bit of a sort of precarious position it's in at the moment, and we're going to have to sort of wait to see sort of what happens with it all. But this is why we do the multiple charts, to sort of see if we can sort of see if these things will have sort of cross chart confluences. All right, gold silver ratio is something that we can use for that as well. So this is what I put out yesterday, and I put it on the video as well. Put a chart on it. Because I was saying, look, this looks like it wants to come back up over here. I'm sort of looking around this 85 area over here. This is why I was looking short on the metals yesterday, because, typically the way that you can expect sort of metals to be moving is sort of silver outperforming gold. And that kind of almost sort of happens. It doesn't matter what direction you're doing, but typically, as it's doing better, chart moving to the downside here, gold silver ratio, silver being the preferred, silver being the stronger one, you'd expect metals to be, as a whole, as a market, stronger. And we've seen that. I mean, look, silver has absolutely ripped to the top side. Gold's still ripping to the top side. But as we start to see a little bit of a flare back up over here, same with the US dollar, hit that 4-hour resistance, rejected back down. This also hit the 4-hour and rejected back down. So a break above here is the second effort. And this is what's going to give us our confirmation that we're going to see that move play out. Now, sort of, again, it's not going to be necessarily the be-all, end-all of sort of turnarounds, but what I'm kind of looking for is similar price action to we had down here. Now, there's a couple of things to unpack with this. This is a falling wedge. So this, as a technical setup, is a reversal. And what it do, it failed. Bang. Okay, that's fine. It also failed at this sort of medium term. This is going back to May 24, rising support. So that was another catalyst for this thing to kind of fail through here. Reason for this to sort of just bail as it actually came down through here. But, it was a sort of basically a fake of a setup here, because, that should technically be a reversal, and bang, it broke down, fluffed around a little bit, came back, retested that level. Now, this is a little bit of a sort of wedge here. It's not a channel. Let me just actually confirm that. I guess you could maybe call that a channel. Anyway, for the purpose of this, I'm calling it these three lows through here. But again, a little bit of a sort of setup here where you could expect maybe a bit of a turnaround, and it failed. Bang, came out of the bottom. So we're kind of in this position here right now as we are here. This sparked itself a little rally to come back up, retest this, and then continued on down its way. And this is what I'm saying, that there is a good chance now. We've broken this little 4-hour channel coming down here. Broke out once, back test top side now. Second effort through there. We go up to retest the bottom side of this zone, similar to what we saw previously back in August. If this does happen, that's going to give us our downside on metals. It's going to give us, probably a bit. We're going to see the dollar rally a little bit in this period as well. So, this chart actually has been super, super, super useful. And that, I mean, even even though it's been a headache, particularly through this period here, we're breaking high. It's been a great chart, but for the most part through here, it's been very irrelevant. Well, maybe not irrelevant in that, because I haven't been on that silver train, but it hasn't been. I haven't sort of been able to reference it and actually take something away from it. And this chart now is potentially giving us something that we can action on other markets. And so it's important to sort of go in and out with these sort of things, in my opinion. But if we take out the wicks from overnight, we'll probably see the dollar take out the wicks from overnight. We'll see gold and silver sort of push back down there a little bit as well. Silver, just very quickly, this is the break here. This is like super long term. This is like, I don't know. I have to jump onto the monthly to look at this sort of stuff. I mean, what are we talking here? 1980? That's ridiculous. You know what I mean? It's a super, 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 super long term. I mean, that's before I was born, so very long term resistance here. But look, regardless of that, this same top here, put in the wick at the highs, and then bang, took out the swing lows. And I was actually talking to a mate at the time. I said, look, if this thing goes under 47, so through this area here, we could see this sell down here. Oh, all right, I'm going to be back in a little bit. All right. All right. Anyway, and we're back. So I'll just sort of rush through these ones a little bit quicker and that. But basically, so what we're seeing here, same sort of thing with silver. We've got this nice little channel. We've got this heavy high time frame resistance for 45, 45 years. Sharp sell down. Could be in backtest area at the moment. Take out overnight lows, and then we start to see it cool off. We've seen this with the sort of the RSI or the Soch, that it's coming in a little bit lower each time. So I was, look, it's been a bit of a false thing because this high here is a negative divergence to these highs here, which again is a negative divergence to these highs up over here. But the point at the moment is underneath sort of 45.80s. I think that's where we start to see these things come off. And look, again, it doesn't mean that we're going to see a full turnaround of the whole market, but you could say, let's look at this sort of last move up over here. Where's it going to most likely come back to? And I would say this 61% is probably a fairly decent area that you could be targeting with silver. I mean, it still keeps incredibly bullish. I mean, look at this breakout. And it really, overall, doesn't put much of a dent on it. But if we were to sort of say, look, short term pullback idea, that would be it down to these kind of zones over here. And I think that's very reasonable. But of course, we need to see the dollar rally. If the dollar rallies, then we'll sort of start to see that move to the downside. Aussie finally here tapped right into that zone that we were sort of calling out yesterday. And so again, these kind of things, they leave you in a little bit of a precarious position because obviously this is inverted head and shoulders. This is what I was saying yesterday. It tapped right down into that zone to the cent, pretty much. So look, that move's completed. The question now is, does this come back out here? And then we go, okay, well, this is the inverted head and shoulders. Where's our little thing here? We call this, that's your measured move. Which then gives us a break back up to take out the highs. So, it puts you back over 67 should this happen. And again, this is the thing. So let's get rid of this because obviously this didn't play out, that little bear flag. Get the chart a bit cleaner. But the idea is that basically sort of like you're in two positions here. One, we get a move back up over here and we start to look for this measured move up over 67. Or two, we get this very idea, similar with gold, that we had this sort of nice little support here. This is just a back test. Take out overnight lows down underneath 65.74, and then we start to see this move come back down over here, and we target down over here. So look, this is the kind of thing, you got to really kind of plan for both of these at the moment, but they're your two kind of trades here. And I think your sort of a call line above both, or confirmation line above both, is one above 66.30, looking up above 67, or below 65.70, and we're looking back down at 65.20, and then sort of see what the market does there. And really, it all just comes down to the dollar. Do they do a second effort? Okay, if they do the second effort, then we know where it's going. If they dribble it back down to the lows, well, this is probably when that inverted head and shoulders comes out, and on with the buy the dip show that we've sort of seen with Aussie sort of throughout the whole year. One is, let me just check this quickly. No, it's kind of still flat. It's still in a little bit of an inverted head and shoulders. RBA is still questioning things. US dollar is, we're seeing that rally a little bit at the moment. So now it's a bit of a question here. Excuse me. And risk appetite, we're looking at, look, that's probably still the thing that's kind of holding things up at the moment. So look, there is argument for this, but certainly if we see the dollar sell off, that'll be your sort of setup with it all. You probably see the yuan come back down like that as well. So the yuan will come down, so that will also sort of push up to the top side there. But I think they're realistically your two sort of confirmation lines through there. And finally, just with the yuan, we do have this on the sort of like inverted head and shoulders on the right shoulder. I've been touting this line of 7.15 for quite a while now. You can see it on the higher time frame, not the weekly, the daily here. If we get above, whoops, over here. So you can see it very clearly sort of defining this, and this is coming off a sort of high time frame sort of support. So this support here, not quite like silver's support, but we are sort of seeing similar to this little head and shoulders that we saw back in when's this, September 24. There's your breakout up over the top over there. We're into this zone here as well, coming off that same rising support. Inverted head and shoulders, obviously not quite as big in terms of the actual sort of head part of that inverted head and shoulders, but the point is still the same. We're not looking for the same size targets necessarily above that. Above 722, 723, okay, fine, then you can look up around 730s, but short term, above 715, opens the door to 720, and even in that moment, you can see gold cool off a little bit. You can see Aussie come back down, possibly even to the 64s. And we can see a little bit of a short-term rally on the dollar. But yeah, we have to sort of obviously wait to see if these things are. Look, the other side is if it goes underneath 708. If it gets underneath that, I think we're going to see some big things happening. Should this thing come here. But yeah, we'll wait to that and deal with that when we get to that point there. All right, that's it for me.